Welcome back, Ben. Lovely to see you again.
See you again. Happy New Year.
Happy New Year. And would you like to introduce yourself and tell me a bit about BitGo?
Sure, yes, thanks. My name is Ben Chan. I'm the CTO at BitGo. BitGo is a digital asset financial services company. We've been around since 2013. At the time, we were known for Bitcoin multi-sig wallets and for our security and scalability platform. So we do about 10 to 15% of all Bitcoin global transaction volume, and of course other coins as well. Yeah. So at BitGo, our mission is actually and vision is that we see a world where blockchain can help financial services to be more efficient, more global and inclusive, and also with reduced counterparty risk. And I think that's very important.
Yeah, exactly, because it's so risky from what I'm hearing tonight.
Yeah. So more than a year ago, we started to take a look at solving this challenge of institutional custody, which is what we're talking about tonight. Yes. And I think it's a very important problem to solve because to get to that vision, we have to get institutional adoption, right? Yeah. So last year, we managed to get a trust charter from the South Dakota Division of Banking, and that allows us to be a qualified custodian. So we are the first purpose-built digital asset custodian.
Right. And as regards Coinbase, is that similar? Would they have a similar system as you guys?
Well, I don't know about the way that they implement it. Coinbase is a little bit different in that Coinbase it's an exchange. It started out as an exchange. Okay. And so when you look at traditional financial services, and you can talk about that as pros and cons, of course. Yes. But traditionally, exchanges have not been custodians. Yeah. When you think about it, an exchange, for instance, the New York Stock Exchange and NASDAQ, when you put your money at a broker, that broker then takes custodianship of your money. Yes. Or puts it at a custodian. And when you want to trade, then it helps. There are a lot of middlemen in that process, but the exchange, in other words, the NYSE is not actually the people that take custodianship of the assets.
And I suppose, again, that you guys are sort of breaking the ground because we don't have a lot of options yet as far as crypto custody goes, right? And you guys actually doing that is pretty groundbreaking.
Well, thank you. I think that for us, we believe that we can take learnings from the crypto space, which is where we've been for a long time, and the advantages we can get of trying to minimize counterparty risk. But at the same time, there is a lot that we can learn from traditional finance. In some ways, I think that many early custodians will try and follow the rules of traditional custodians. Okay. For example, the main reason why you have a custodian is because you don't want to hold the asset yourself, right? Yeah. So, a hedge fund, when they would want to invest in gold, would not be a custodian of their own gold. Yes. And so similarly with cryptocurrency and digital assets, they want to have someone else hold that. And there are many practical as well as regulatory compliance reasons for that.
So I tried to get all my network of Coinbase people, someone to come and talk tonight, and no one volunteered. So, really? Yeah. So can you speak briefly about the differences between Coinbase and you guys as far as crypto custody goes?
Well,
they're not here to refute it.
They're not here to refute that. No. I have heard that recently they were moving more towards the consumer space. Okay. And we are very much focused on the institutions. Right. We've done this for a long time, like even before custodianship back in 2013, 14, 15, yeah. BitGo was a lot about being the platform on which many exchanges had built, their wallets on top.
Right, okay. And what's your vision personally of the future? Like, where do you think this is all going to go as far as crypto custody goes?
I think in the medium term, we're going to see that people who have solved the custody problem also want to solve return on assets. Okay. And so that's going to mean that they want liquidity. So, a big problem is, let's say you have this fiat or you have some Bitcoins and they're very safe, right? But how can you get some return on value on that?
Yes.
And so the first group of people that we were trying to target are those that just want to keep the Bitcoin and just wait for it to go up in value.
Yeah.
But there are others, right? Like in financial services that want to trade it. They may want to say, I would like to sell my Bitcoin and buy some Ethereum or whatever it is.
Yes.
And that's more active kind of return on asset, but there's also passive types. For example, lending. So I think lending will get bigger this year. So say I have a lot of, a company has a lot of Bitcoins and they want to store it in custody with BitGo.
Yep.
Then next question is, I plan on keeping this for 2 years. So can you maybe loan it out and get a little bit of interest on that? And I think that's where it's going to be headed in the medium term.
That's interesting because I've never heard anyone talking about loaning or using coins in loans. But of course, that's really feasible, isn't it?
Yeah, I think, and if you look at like traditional markets as well, that's how a lot of traditional finance works. I mean, that's the very first few banks were, they took gold and they loaned it out.
Yeah.
And now there's right ways to do it and wrong ways to do it, right? Yeah. Like some of the gold bankers, they would give pieces of paper saying, I loan you this amount, and then you become fractional, which isn't great. So we have to figure out how to do that right. But I think that's in the medium term.
Interesting. Okay, that's really interesting. Well, thanks so much, Ben. And I think this panel is going to be really interesting, even without Coinbase.
Well, we'll see. I think there's a lot more that we can talk about there, and I look forward to it.
Yeah, great. Thank you.